In June 2025, the market is no longer driven by fear. It's quiet, almost too quiet. But that is when long opportunities emerge. Today, I want to show you how I'm targeting three of the world's biggest companies: Amazon, Google, and Apple. Not with hype, not with hope, but with a rules-based option selling strategy that pays me upfront while I wait for the perfect price. First, let's talk about why I'm focusing on Amazon, Google, and Apple in 2025. All three are market dominators. They are not meme stocks, they print cash, they have pricing power, and they are trading below what I consider their fair value. But here's the thing, just because a stock is great doesn't mean you buy it at any price. That is why I use a strategy called cash secure put, which let me get paid to wait. So what is a cash secure put? If you are new, here's a quick version. Cash secure put is a strategy where you agree to buy 100 shares of stock at a specific pricing called the strike price on or before a certain date. In return, you get paid a premium upfront. It's like this. You get paid to wait. If the stock stay above your strike price, you keep the premium and nothing else happen. If the stock drop below your strike price, you'll be assigned, meaning you'll buy the shares at a lower price, which is exactly what you agreed to. Either way, you win because you are only doing this with stocks you already want to own, like Amazon, Google, or Apple. That is why this strategy is powerful in 2025. The market doesn't need to go up for you to make money. It could go sideways or even down a little. And as long as your stock stay above your strike price by expiration, that premium is yours to keep. There's no hype, no guessing, just consistent income month after month. And if the stock dips, you get a sign. You are now holding a quality company at a price you chose, a discount to the current market price. It is a smarter way to enter long-term position with built-in downside protection. This is the core of my strategy. And now let me show you exactly how I'm using it this month, starting with Amazon. Amazon is trading at 213 right now. Analysts have a 12 months price target of 241 on average, with the most bullish forecast going as high as 300. But let's ignore the price target for a moment, because the real story is in the fundamentals. AWS, Amazon Web Service, remains the company profit engine, even after the 2023 to 2024 AI boom cool down. Cloud demand is still accelerating, driven by enterprise adoption, AI interfere workload, and international expansion. It's not slowing down. In fact, in Q1 2025, AWS revenue grew 17% year over year, beating expectations. That's big. Amazon recently announced the launch of its AWS Asia Pacific region in Taipei, marking a significant 5 billion investment targeting technology expansion. So with Amazon's strong fundamentals and trading in a healthy range, I'm using cash secure put to target at a lower price and getting paid to wait. Right now, Amazon is trading at 213. Most investors are either buying in now or waiting and hoping for a dip. But I took a different approach. Instead of chasing Amazon higher, I sold a cash secure put at 200 or even 195. That means I get paid upfront to potentially buy the stock at a better price. Let's say I sell the $200 put and collect 300 premiums. If Amazon stay above 200, my contract expire worthless and I keep the full 300 premium without buying a single stock. But if Amazon drop below 200, I'm obligated to buy 100 shares at 200. But remember, my real cost is 197 after the premium. That is almost 16 per share discount from today's price. And I don't mind owning Amazon long term because I believe in the business, AWS, advertising, e-commerce, and automation. This is how I turn a volatile market into a consistent monthly income. Instead of guessing where the market is going, I get paid to wait for my price. And if I ended up owning the stock, I'm owning it cheaper than most people. Selling put on great companies you want to own, getting paid upfront, either collect cash or buy at a discount. Repeat it monthly and this will be the right strategy for you. Next is Google. Trading at 173, analysts have a 12 months price target near 199 with the high estimate at 250. But 2025 has been mixed for Google. Let's break it down. Recent news and risks. Google dominance in ads and YouTube remains strong. AI development, Gemini plus DeepMind are under monetization but promising. Meanwhile, Google core advertising business is still a cash cow. Even with increasing competition from TikTok and Amazon, Google Search and YouTube are holding strong. Advertised revenue for Q1 2025 was up 13%. YouTube Premium, over 135 million subscribers worldwide. Most people hate uncertainty, but me, I love it because that is where the best opportunities hide. Take Google for example. The stock is trading around 174. I'm not chasing it, I'm targeting the 165 strike where I can sell cash secure put. Those puts are paying me about 220 to 250 for just 30 to 40 days of potential risk. That is 1.3 to 1.5% return in 1 month. And here's the kicker. If the stock doesn't fall to 165, I keep the cash. If it does fall below 165, I buy one of the most powerful companies in the AI race, Google, at a discounted price of 162.5. In 2025, Google isn't just a search engine, it's a cloud computing giant, an AI leader, and a foundational layer of the internet. This is what smart risk look like. I pick companies I already want to own. I set a price I'm happy to pay and I get paid while I wait. This isn't gambling, it's about using volatility as a weapon, not a threat. Finally, let's talk about Apple, a company that need no introduction, but maybe a little of revaluation in 2025. Apple is trading at 203, down roughly 19% year to date. Not because the company is broken, far from it, but because the market is demanding more than just iPhones. Analysts still believe Apple can hit 235 within 12 months. But let's be honest, Apple isn't about breakout growth anymore. It's about consistency, cash flow, and brand dominance. What I do with Apple, instead of chasing to buy at 203, I look at selling puts around 190 to 185 level. This contract currently paid around $2 to 250 for 30 to 45 days. There's a potential of 1.1 to 1.3% returns per month just for waiting. If Apple stay above 190, I keep the premium. If it dips below, I buy the most valuable brand in the world at a discount. Apple might not be a 10x from here, but if you want defensive tech, consistent income, and a product mode that everyone is using it, this is one stock you'll be glad to own in any environment. The real edge in 2025 isn't buying every dip, it's about consistent with a strategy. In a year where every headline screams urgency from AI breakout to election drama, the temptation is to react, to chase every spike, to panic on every drop, to always do something, but that is where most investors go wrong. The market doesn't reward noise, it rewards discipline. The age today isn't into picking the next main stock, it's not into calling the exact bottom. It's in showing up week after week with a strategy that works regardless of market mood. That is why I sell cash secure put on Amazon, Google, and Apple. I'm not guessing where prices will be tomorrow. I'm positioning myself so that if the market pull back, I get to buy world-class company at prices I love. If it stays float and drift up, I collect premium income and move on to the next trade. It's not gambling, it's setting up traps with patience, cash, and conviction. Most investors wait for the dip and miss it. Others jump too early and regret it. But me, I don't need to be perfect, I just need to be paid to wait. That's the power of rule-based option strategy in 2025. It lets you lean into uncertainty, not run from it. and it keeps your capital working even when the market feels like it's not going anywhere. Like this video if you got value and subscribe for more monthly breakdown and portfolio update. This is the game. Stay consistent, stay patient, and keep building. If you are interested in learning more about option trading, check out this video right here. I break down more strategies you can use to generate consistent income with options. Don't forget to like this video and subscribe to the channel for weekly tips, portfolio updates, and real examples of how I trade. Until next time, trade smart and stay profitable.